Oh. Good morning, good morning. How are you guys doing? Nice to have you on this Wednesday morning, September 4th. Fall is in the air, that's for sure. And to start off this session, I wanted to take a look at gold. Get a lot of questions from you guys about gold. What's going on with gold? What should we expect? And if you watch the CFTC video that we just recently did, you should see that it's very important to put things into context, proper context. Okay, I'm going to open up the data, and I'm just going to briefly look at it with you guys, just so that you understand. Yesterday, I did a wonderful coaching call with a gentleman, and he brought something up to my attention that I thought, is probably something, since it was a question of his and something that he was thinking about. Maybe it's something that one of you out there are thinking about as well. So what we were discussing was the CFTC data and how to read it to give a trading signal. And one thing I want to make very clear is that there is no one source of information that can give you a trading signal except for just the chart. Okay, you can locate a buying signal by doing chart analysis. Okay, doing the supply and demand, all that stuff, the trends, the trend lines, and locating a signal that way. Okay, but you can't look at the CFTC data and have a signal be produced, right? So, and you can't look at retail sentiment alone and find a signal. I mean, you could potentially trade based off of signals that you find, but you're not going to have consistent results, because to increase the odds of winning, you need to put all these things together and locate the signal that way. So first things first, you need to put things into context. And this is why I track the CFTC data, is because I want to understand, what are the large institutions doing, right? The large institutions are the ones that are moving the markets. So I want to know what they're doing with their positions. If they're not accumulating a long position with a lot more room for, more longs to be added, then I really don't want to be buying gold, right? I don't want to be doing that. If they're reaching near maximum size and they're adding to their longs, then if you're going to get in long, you better do it off of a shorter time frame chart, okay, smaller time frame chart, and be careful with your targets, because you don't want to have your targets too far away, because the context tells you that they're not that far away from maxing out on their long positions. Okay, so when we look at gold, and we look at what their maximum size was for longs, it's 408,000, okay? We're not too far away from there. Last time we reached 349, they took profits at that point. They took some profits, and now they're adding back. We reached highs of 355. We're not that far away from 408. So could we see a move to the upside in gold? Potentially. But you'd have to trade the shorter time frame charts. And so shorter time frame charts would be like daily chart or the 4-hour chart. Here I have the daily chart, okay? And if we take a look here, we can see that I have labeled this as being an uptrend, all right? So using the concepts and principles that we teach at the school, we have verified this as being an institutional uptrend. And here is an institutional buying zone right here. So nice uptrend with a buying zone. Price has come into that buying area, and price is moving to the upside. So short-term momentum is telling me gold can go upwards, all right? Gold can definitely go upwards, but we got to be very careful because of this these long positions reaching near maximum size, okay? Now, if I take it down one notch, take a look at this. Here is the 4-hour chart. And the 4-hour chart had an ascending trend line here. That's since been removed, okay? Not only that, but an institutional buying area has also been removed. So pressure short term is to the downside right now. So if I wanted to take a long trade in gold, would I want to blindly buy at that daily demand zone? Personally, I wouldn't want to. Okay, I don't. I like to be in a trade and I like to ride the wave. Okay, I like to be in a position and profit from that position by holding on to it for multiple days. I want to really, really get in at a small risk, hold it for a long period, and get a large reward for it. I'm not going to risk my money for just 1-to-1 ratios. I'm not going to do it. Even 2-to-1 is not good. All right. I don't like that. I'm not going to put my money in the market, have it sit there just to make a 1-to-1. I mean, why would you risk one only to make one? It makes no sense. But okay, some people do that. Whatever. So short-term time frame, 4-hour, it's looking weak to me. Okay, we already tested this area of daily demand once, and now we're coming back again. These are weak signals for me. Okay, this is weak price action signals. So I'm not too thrilled about what's happening with gold. What I'd like to see is a larger drop in gold. I'd like to see these positions decline, the long positions decline, and then from lower areas of demand start to rebuild price. And then when I see that the banks are starting to accumulate a long position, that's what I'd like to enter in on. Okay. I'm going to go over the euro right now. We had an incredible short signal on euro. I had mentioned this to our students, and still waiting for that target to be hit. It's playing out perfectly, but I want to show you the accuracy of the system that we use here, because this is something that we teach at the school with regards to what time frames you have to look for specific signals. So we had an area up here, this area up here that we were watching. And so I had mentioned to our students that once this area breaks through, that's going to be the signal for price to move even lower. Okay, but that was the key area that we needed to watch to have it break, and then that would signal to move to the downside. So based on some concepts and principles that we teach at the school, we knew that for entry, we could go down to a 15-minute chart. And let me just bring this up here so I could show you what took place. All right, so let me zoom in. So this big block here is the area that we wanted to see price breakthrough. Okay, and for an entry in short, we could switch this time frame to the 15-minute time frame, and we could watch for a zone to be created for entry. So specifically, we'd be looking for a supply area. So basically what we're looking at is we're looking at the institutions coming in, and on a 15-minute block of time, they came with aggressive sell orders, okay, to trigger a move to the downside. All right. So our analysis, we look at the monthly, the weekly, the daily, the 4-hour, all the way down, dwindle it down to what are the banks going to do in a 15-minute time slot. That's how accurate this analysis is, okay? What's the banks doing in a 15-minute time slot? So we're watching price, and this is what takes place, okay? Big move to the downside. When it created the big move to the downside, it created that 15-minute area of supply that we're watching for right here. Right there. Okay, that's a 15-minute time slot where the banks came in and filled in an aggressive amount of short positions. So that was our signal. And take a look. Price rallied up, got triggered into that area of supply, and look what's been happening ever since. Okay. Look at that. A little test. There was supply being formed on a higher time frame, and then look at the drop after that supply was contacted. Institutional trading, selling, price goes lower and lower and lower and lower. And so We're just about to hit our demand zone. We're still holding and waiting for that area to get hit. So we got our demand zone lower and our target down by that demand area. So you can see the accuracy. You can see, I mean, how do you locate a 15-minute time slot where the big institutions are selling? I mean, it's unheard of. You know, people have not done this before. This is something completely different. So, you know, when people tell you you can't time the markets, here's a perfect example of that. Okay. All right. So I think that's it for now. I think we're good. I think I shared quite a lot with you. Hopefully it was helpful. And I'm going to continue recording. And the rest of the session is going to be for members only. If you want exclusive peek, exclusive access to this full version that's going to be for members only, go over to our Twitter page, retweet the comment where I posted this video, and I'll choose one of you to get access to the video. All right. We're going to continue looking at the currencies. We're going to look at the indexes. We're going to take a look at what took place yesterday. Some significant demand was removed. That opens up the floodgates for a move down. So we'll discuss that a little bit more in detail for the members only video. For now, I wish you a good day. You take care, and we will talk to you soon. Take care.